All right, what's going on, everyone? Good morning and happy Monday. This is Taylor kicking things off for August 28th. Hey, Briggs, hey, Sean, Russ, Andrew, Mirza. As always, guys, hope you had a good weekend. I hope Mother Nature was good to you. I hope your NFL or Little League World Series team of choice took home the W. But all right, y'all, if I sound a little tired this morning, I can assure you I was not out partying last night. I got a cold or a flu or something. I've got a little something. But all right, so little bounce here in the futures. Got the NQ up about a little more than 0.5%, and the MP futures up a little bit less than 0.5%. So 2 levels here for you guys this week. Let me drop this down. And you can look at something similar on the cash product. But on the futures here for this week and maybe the next, hopefully not, but for the foreseeable future, I think you want to mark up your daily 50, which right now lines up around 44.90. So mark up your daily 50, and then I think you mark up 43.50, which of course is the recent low here. And then I think the issue is you might be stuck in this box for maybe a little bit longer than any of us want. My preference is we just break short, or vice versa, we're back above the 50, and then maybe we're trying to play it back towards these highs. Now, as far as the signals go inside this box, the biggest issue right now is the daily sell signal. So a lot of things last week got their first daily sell signal. In some cases, the first daily sell signal since January. And I'll show you a few of those. QQQ gets the first daily sell signal since January. Who else was it? Netflix has daily sell signals now. And then the S&Ps too. They got a fresh daily sell signal on Thursday. So until that changes, it tells us structure, momentum. Even if we are in a bit, even if we are in a bit more of a box, so long as we print that sell signal, in terms of a big directional move, better chance things break short. In terms of the day-to-day game plan, jump back to the futures here. But until the sell signal gets canceled, what I would like to do is put on shorts towards the upper end of that range. We break through the low, I think we're going to dump. If they can rip it back through the 50, then they might try to stabilize it. This morning, we're pretty much like dead in the middle. Trading dead in the middle as far as a swing trade, that's where things can be a little bit tricky. For me, there's 2 spots where I would look to get short. The first spot, which I think could be the more difficult trade, would just be the break of support. Market rolls over, we close under 43.50. Then you look to put on the short. That's one entry. My preference is we're getting short somewhere up here. Somewhere near that 21 EMA, somewhere a little closer to that 50. What that allows you to do is get short with what I think is a much better risk versus reward than getting short here this morning. You get short this morning, you might have to sit through a bounce all the way back towards the top end, and nothing's really changed. If you get short here at the bottom, you might have to sit through a really big bounce. For conversation's sake, if we can get short, say, really anywhere near that 21, now we have a much better risk versus reward. put on the short near the 21. The way that I would play is at that point, the exit would be a move back above the 50. So my risk would look something like this. All right, there's my risk box. And then from there, if the market does puke, you can catch a move into a brand new low. So that's the side of the risk reward I want to be on. Getting overly aggressive here this morning in what kind of feels like no man's land for a swing trade doesn't feel like the ideal spot. So that's a long way of saying I'm going to continue to try to short bounces, where I'm going to try to be a little bit careful. On the swing side of things, again, is when we're kind of just caught here in no man's land. We're not really anywhere near big support, and we're not really anywhere near meaningful resistance. What I think gets easier here in the middle is a bit more of a day trade focus. So if I'm trading the futures, while I'm waiting for that swing trade, one thing I might watch here today could be the hourly squeeze. Got the squeeze signal, got the green label. Then I can work the entry, try to play that for a day trade. Then I think you wait for a spot for a swing trade, either closer towards resistance or closer towards support. But that's the bulk of it, guys. One name that I do continue to like here, if Mama Market does throw in the towel, will be AMD for a move down towards that daily 200. And we got 2 trades under our belt here so far. Currently, we got the third. And the beautiful thing is the squeeze hasn't even fired short. Still locked and loaded. That's all going to come down to the market, though. If the indices spend the next 2 or 3 weeks trying to grind higher, it's going to be tough to see AMD lower. If this week the S&Ps and the rest of the indices break the lows, I think pretty quickly you see AMD down towards 95, 92. So for those of y'all in the mastery, we're just going to keep taking shots on this thing because at this point, and this is something I want to try to do a better job of with the squeeze. One of these things where you'll take your first entry, you catch a flush into your target, so you book the profits and then it bounces. And then it's basically the same exact setup. Still have the squeeze, you still have your signal. But now you got a chance here to play with profits. All right, so you caught it once. Then on the next bounce, you reload. You catch another flush, keep doing that until the squeeze officially fires. And until price is potentially down towards that bigger target. So the trade that we have right now are some 90 puts. Took one trade, booked the profits, took a second trade, snagged the profits, and then for the third trade, we're just taking a small chunk of those profits, and then we're buying the deep out the money puts. So then the thinking is, no matter the outcome, because we already booked profits from 2 trades, if the third trade here, if those 90 puts go to 0, between the 3 trades, we're going to walk away with a net profit. That's worst case scenario. We take a little bit of the money we've made, we roll that into a further out the money put, that trade blows up on our face, still walking away with a paycheck. Best case scenario, the squeeze does fire, you catch the flush towards your target, now you're making more money from one of your better setups. So when I go through the scans this weekend, this is the one that continues to stick out. And that's kind of been the case of the last 2 or so weeks here. So my job is one of 2 things happens here. One, the squeeze eventually breaks short, and price comes down towards 95, 92. Or at some point, something changes here, and then the setup is no longer valid. So the goal is, as long as the squeeze is valid, as long as the signal is valid, keep rolling out those profits until the trade works. Or until she turns on you. So I definitely like AMD for a short here. Market willing, of course. And then for swing trades here, guys, I'm still not interested in anything to the upside. I think we can take a 15-minute, 30-minute hourly squeeze and look for a day trade. But as far as the classic daily squeeze with daily buy signals, we're going on week 4. Maybe a little bit longer, but we'll call it week 4, where nothing that comes up on the scans has actually gone on to work. And I've showed you all these names. For solar, falls apart. BP got canceled out. BK got creamed. Monster Beverage going nowhere. Signal and EQT got canceled. Signals and Oxy got canceled. And EOG and ExxonMobil. None of them are working. And again, the problem is, if we just look at the scoreboard for the futures, scoreboard says the Bulls have 0 points and the Bears have 4 points. By default, swing trades to the upside, they're not going to work that well. All right, scoreboard tells you momentum, structure, moving average crosses, nothing actually supports things trading higher. Really for more than maybe a day. You can imagine if we're back in May, June, the scoreboard was a total opposite. The Bears had 0 points, and the Bulls had control. So guess what works really well back in that market? When the scoreboard looks like that. Daily squeezes with daily buy signals. Catch Netflix. You catch LRCX. You're catching a little bit of that Mara. Some of that Mara sauce. There was Zillow. Now, in the current market, you can find things on the scans that look just like that. Got the squeeze, got the buy signal, you got the green label. You have no wind at your back. So until that changes, until they actually work, I'll run the scans, I'll see what's up. I'm not looking to trade any of them. Until things change a bit more focused on, what looks like AMD. And AMD looks like something that's poised to flush pretty good if the market does continue lower. So for now, I'm taking the A+ setup. We're doing the same thing we were doing in May, June, and early July, just in the opposite direction. Taking the A+ setup, trading it in alignment with the signals in the overall market. Alrighty. But any questions, guys and gals, anything you want to look at, any chart requests, I am here for it all. We got a decent little bounce going here. You got the box on the NQ as well. And we're kind of smack dab in the middle. All right, Rami, what's up, Rami? Rami's got some Coca-Cola. Yeah, so that's another one where you've got the signals for a short. You got a lot of them here, Rami. The 3-day, the 2-day, the daily, and the 4-hour. They all print a squeeze and a sell signal. So 1, 2, 3, 4 time frames where there's a pretty good chance those squeezes all want to break short. If the S&Ps just grind higher all week, It's tougher for Coke. It's tougher for everything to flush lower. So you've got a stock here where the stage is set. In a lot of ways, this reminds you of McDonald's. McDonald's was a really similar setup. The thing about our McDonald's short, though, is we sat there for 3, 4, 5 days, and then we finally caught the flush. We didn't finally catch the flush until the S&Ps decided it was time to go lower. So as we're sitting there at McDonald's, here goes the S&Ps, just chopping. Then they break short. And then being short McDonald's, being short AMD, pretty much being short anything, starts to work really well. So same thing for Coke here. You can time it with that next flush in the overall market. Got a really good setup. Zen wants to look at some snow. Yeah, snow's in a tricky spot. I call it a tricky spot because we're right up under that daily 200 SMA. And things can usually get pretty interesting here. You typically have you got two sides of the fence. You got the one group of folks where, okay, Snowflake is under the 200. It's a huge short. All right, so everybody just piling into shorts. What that can create, if they can rip it back above that 200, is everybody getting stopped out of those shorts. All right, so in a lot of ways, almost like a bear trap. Let's pull price lower. Let's break under, the moving average. Page 1, chapter 1 of how to trade. Break that level, get everybody short. And then if they can get it back above, they can try to trigger that short squeeze. So that's the mission for the bulls here. Yeah, Larry, for sure. So we shorted McDonald's. Let me do this real quick. I might be off on the exact day, Larry. Excuse me. But we shorted it, one of these days right here. And then the squeeze fired officially on the 16th, which would have been this bar. So squeeze officially fired short on that day. We're getting short, I want to say, on this day right there. 1, 2, 3, 4, 5. Yeah, that sounds about right. And then that's a goal. Find the squeeze with the signal. Try to get positioned long or short before the squeeze officially fires. That is the goal. Yeah, Rami, that tends to be my thinking. Where swing trading just gets really, really difficult when you lose that directional wind at your back. All right, provided by the S&Ps, the Qs, etc. And not to beat the dead horse, but that whole small account challenge thing I did for myself, the the growth over the course of that 5 or 6 weeks, that growth is like borderline impossible if you're not getting that wind at your back. If the 6-week stretch just looked like this and not that, and I tried to be as aggressive as I was, tried to take as many trades as I was, the account probably would have gone to zero. So I think one thing we can all aim to get better at, myself especially, is really just trying to save your chips and just really wait for those moments in time where, as a swing trader, it's like, hey, I've got everything I need lined up right now. I've got a bunch of great setups on my scans. They all got perfect signals, and the market sets up perfectly. Now, easy to say in hindsight, of course. But I feel like if I can just continue to do a better job of trusting the signals, they'll tell me when it's time to get aggressive. And then they'll tell me when it's time to chill out. My goal one day in the future is, all right, everything's lined up for a big move. We're kicking ass. We're taking advantage of it. And then I'm going to go do something with my family for a week. We've gone from bullish to neutral. The scoreboard has shifted. Momentum broke. All right, now I'm going to chill for a bit. And then when I get my next round of signal saying, hey, start to pay attention here, you're back at it. And I don't mean you disconnect from trading. I just mean the aggressiveness, so to say. Yeah, I can take a look at CAR. Yeah, we're seeing a lot of this right now. What I mean by a lot of this is, had a huge push, a really big move, finally pulls back to the buy zone, starts to print a brand new squeeze, but we're going on month 1 and change, where momentum has been below the zero line. So now this current daily squeeze is nothing like that daily squeeze. For that daily squeeze back there in May, bulls had momentum on their side. For the current daily squeeze, the bears have momentum on their side. So here's what happens. Momentum peaks back here in June, July. Momentum peaks. Right, just keeps going lower, keeps going lower. This is your gas tank. Right, that's your gauge. You've got 400 miles till empty, 300, 200, 100 empty. But notice how they keep trying to push that car forward. Right, they're ignoring the gas light. Oh, we're good. We're good. I'm sure a lot of you seen that episode of Kramer. All right, they try for a few breakouts. They never fix momentum. Right? They never take the time to pull over, refill the gas tank. So take AI for an example. Huge push. Why do I got a black marker? Can't see it. All right, big push. Finally pulls back to the buy zone. Prints a brand new daily squeeze. Momentum peaked in June. It crossed negative in, we'll call it early July. They keep trying. Try to break out. Never refill the gas tank. Eventually, they throw in the towel and the squeeze breaks short. Same thing for Apple. Keeps trying to go, and then down. So same pattern there in CAR. The first thing the bulls will lose is momentum. Then if they can't fix momentum, then they lose structure. Structure looks fine. You're above your 21. You're above your 50. Then slowly but surely, everything kind of degrades. All right, guys, let me keep getting caught up here. Good morning. Good morning. Starbucks. The easy trade here on Starbucks was, or would have been, back here in that squeeze signal. Catch the dump, and then take the cash off the table. So if we look at the inverse chart, so minus S bucks in a bit more of a bullish kind of setting. Now we're at the point where, all right, made a nice move, and now I'm probably trying to buy the next pullback. Ideally, somewhere down towards that 21 EMA. Right, the art of buying the dip. So for the real chart here, now we're kind of at the point where on a rally back to that 21 EMA, then we would look to get short. So long as the signal still lined up. Hey, good morning, Evelyn. Microsoft and Nucor. Yeah, so Nucor is another example of that momentum divergence. Momentum peaks in July. Right. Gas tanks going lower, going lower, going lower. Crosses negative. So now we're officially running on E. Keep trying to push it. Try to break out, try to break out, try to break out. I would think on a close under the daily 50, you probably see that daily squeeze fire short. Same pattern as AI. There's a lot of this right now. Walmart. Walmart, not a bad example. Home Depot. Momentum peak late July. Try to break out, try to break out, try to break out. Now the only thing kind of saving Home Depot here is the daily 50. Momentum already wants to go lower. Now if they take out the daily 50 and they lose their structure, down she goes in most cases. And then Microsoft. Yeah, so Microsoft's going to be interesting. Got a couple squeezes setting up here. And as of Friday, we're having a brand new bear squeeze on the daily chart. It's going to come down to the Qs. The stage is set. Got the squeeze, got the signals, got all the good stuff. But, that trade works really well, really quick. If today, tomorrow, Wednesday, the Qs are taking out 355. All right, really strong probability QQQ takes out 355. Microsoft's taking a dumper. Really, maybe even a stronger probability. If QQQ takes out 370, Microsoft's not firing that daily squeeze short. So take that setup and then just try to work that timing. If we wake up this morning and the QQQ has buy signals on the 2-hour chart down to the 5-minute, we're probably not going to take out the lows just yet. So maybe I hold off on getting short Microsoft if the QQQs get a bunch of buy signals. If I see a bunch of sell signals, I see price coming down towards the lows. All right, a little different. Young, XLF. It's a finicky one. The daily chart's all kinds of sketchy. Under the 21, under the 50, under the 200. So that's kind of playing with fire. But then if you jump to the weekly chart, at least for now, the weekly chart still has a buy signal, and you still have support here at the 21. That's pretty much all they got to stand on, though, is their weekly buy signal and support at the 21. So we'll call that 34. Yeah, we'll call it 33 and change. Under, yeah, make it easy. Last week's lows. If we get a break and a close under last week's lows, the Bulls have pretty much, they've ran out of reasons to keep it higher, really. Tricky spot there. Really tricky spot. Russ Twilio. See if that as far as AMD, see if that changes at the open. Yeah, Twilio's. I think it just needs a close under the daily 200. Because notice how we've had the squeeze signal since early August. Tries to break the 200, tries to break the 200, tries to break the 200. To no avail just yet. But the signals point towards it wants to go lower. So I think the only thing you need here is just a close under 58-ish. And then more importantly, at that point, it becomes a really good risk versus reward trade. Say we're putting the short on at $57. The exit on the trade, at least the way that I would play it, the exit on the trade would be a close back above 58. I only want to be short under that 200 SMA. So there's there's your risk. Squeeze break short. Get a really nice move. So I would look to play that, but I would at least wait for that. Even though you're kind of late as far as the entry, a little bit later as far as the entry, I think in terms of trying to catch that flush immediately, it is a little bit better timing to do it under the 50. All right, guys, unfortunately, I got to let you go here. Got to go take the good people in the gold room through the open. But I will be back later this week, hopefully with a chance to hang out for a little bit longer. But yeah, kind of as a summary here, my general advice, especially if you like to trade the squeeze, as long as we're in the box and as long as we're kind of in the middle of the box, day trading might be a little easier. So go look for those 5-minute, 15-minute, 30-minute hourly squeezes. And then in terms of a swing trade, either long or short, gets a little bit easier down here. And for what I'm looking for, a little bit easier somewhere up here. The center line can be tricky. But all right, my friends, thank you for your time this morning. I wish you all the best of luck this week, and I will talk to you all soon. Adios.